Hey guys, it's Carter. Welcome back to the channel. In today's video, we are diving in and we are looking at this CPI report. It just came out. I wanted to break it down and you guys will see how this correlates to the stock market. So hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. So what is going on? What is the CPI? So CPI is the customer price index. And anytime we see the CPI go up, normally what that means is inflation goes up. So you guys will notice that the prices rose about 0.4%. Might not seem like much, but it's still more than expected. We were expecting about 0.3%, and in the past year 3.6%. What we actually brought in was 0.4% and 3.7%. So we were pretty much 0.1% higher. It might not seem like much, but as we go to the chart here, you guys will notice that right now in the S&P 500, we've seen a decent amount of sell-off, right? You guys will see. As well as if we go to like QQQ, which is just a pretty much like a NASDAQ ETF, you guys will notice that we saw pretty much a huge correlation to this. Massive amounts of sell-off here, as you guys can see. And it did have some decent, I would say decent resistance up here at about 373, support stepping in at 367. So in the grand scheme of things, this report was not the greatest. Anytime we have higher inflation, this is going to cause more stress on the economy. For Fed to possibly increase the rates, for the Fed to figure out something to cool down inflation. That's why they've pretty much hiked these rates. We all know in the past, we've seen the highest rates in the past 22 years. And recently they've came out and said they're pausing the rising of rates. But do I think that they're going to continue to rise? I'm not sure. I do expect them to hold their ground a little bit longer before they, increase these rates. The issue is when we increase rates more and more and more and more, it slows the economy down more and more and more and more. This could be job layoffs that could possibly put the stock or put the economy in some sort of recession or putting more tension on the economy. And looking at some other reports here, you guys will notice that this was the latest numbers here. And this is by the U.S. Labor of Statistics here. And you guys will see all items 3.7, but the bigger ones were food. And you guys will see major categories. Energy actually was negative 0.5%, which is relatively good here. As well as you guys will see here that this inflation report won't let the Fed declare victory. Obviously, they're not going to. I definitely think the next report that comes out for October is going to be very, very influential on if they increase these rates again, and if they increase them, then there could be possibly more sell-off in the economy. So crazy times, but overall, what does this mean as investors? At least for me, I don't get shaken out of these day-to-day prices. Honestly, I look at it as more of an opportunity. As we get sell-off here of this beautiful, beautiful ETF, I look at it as, can I buy this thing at a more affordable price? Looking at the long-term chart, you guys will see that we are still relatively up on the highs here. Looking at like an S&P 500 ETF, you guys will notice that we've seen a little more sell-off in the S&P, but still almost nearing all-time highs. So I do expect that we will get some decent amount of sell-off, most likely trading back down to $375 to about $400, right in that range. I think that's a very, very fair price evaluation for everything going on, but who knows? For me, I'm going to continue to invest, continue that process, but that's honestly everything going on with that CPI report. I hope you guys all enjoyed it. If you guys did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.